Hello traders, welcome back to my YouTube channel. So today I'm going to share a live intraday 5-minute scalping price action trading strategy. But before we start, we need to understand price action trading patterns. What is a trend line? Trend lines are easily recognizable lines that traders draw on charts to connect a series of prices together or show some data's best fit. The resulting line is then used to give the trader a good idea of the direction in which an investment's value might move. A trend line is a line drawn over pivot highs or under pivot lows to show the prevailing direction of price. Trend lines are a visual representation of support and resistance in any time frame. They show direction and speed of price, and also describe patterns during periods of price contraction. We open AUD/NZD asset 5-minute time frame and draw supportive trend line as well as zone area to understand market movements. Here you will see that candle got rejection through the trend line as well as zone area and a bullish engulfing candle formed. So now we have almost 3 confirmations. First confirmation is candle got rejection through the supportive trend line. Second confirmation is candle got rejection through the zone area. Third confirmation is we got a bullish engulfing candle. So, after 3 solid confirmation, here we place a buy trade. It takes 2 or more points to draw a trend line. The more points used to draw the trend line, the more validity attached to the support or resistance level represented by the trend line. It can sometimes be difficult to find more than 2 points from which to construct a trend line. Even though trend lines are an important aspect of technical analysis, it is not always possible to draw trend lines on every price chart. Sometimes the lows or highs just don't match up, and it is best not to force the issue. The general rule in technical analysis is that it takes 2 points to draw a trend line and the third point confirms the validity. Uptrend line. An uptrend line has a positive slope and is formed by connecting 2 or more low points. The second low must be higher than the first for the line to have a positive slope. Note that at least 3 points must be connected before the line is considered to be a valid trend line. Uptrend lines act as support and indicate that net demand less supply, is increasing even as the price rises. A rising price combined with increasing demand is very bullish, and shows a strong determination on the part of the buyers. As long as prices remain above the trend line, the uptrend is considered solid and intact. A break below the uptrend line indicates that net demand has weakened and a change in trend could be imminent. Downtrend line. A downtrend line has a negative slope and is formed by connecting 2 or more high points. The second high must be lower than the first for the line to have a negative slope. Note that at least 3 points must be connected before the line is considered to be a valid trend line. Downtrend lines act as resistance, and indicate that net supply less demand, is increasing even as the price declines. A declining price combined with increasing supply is very bearish, and shows the strong resolve of the sellers. As long as prices remain below the downtrend line, the downtrend is solid and intact. A break above the downtrend line indicates that net supply is decreasing and that a change of trend could be imminent. We won this live trade. What is a triangle? A triangle is a chart pattern, depicted by drawing trend lines along a converging price range, that connotes a pause in the prevailing trend. Technical analysts categorize triangles as continuation patterns. Understanding triangle patterns. Triangle patterns are aptly named because the upper and lower trend lines ultimately meet at the apex on the right side, forming a corner. Connecting the start of the upper trend line to the beginning of the lower trend line completes the other two corners to create the triangle. The upper trend line is formed by connecting the highs, while the lower trend line is formed by connecting the lows. Triangles are similar to wedges and pendants and can be either a continuation pattern, if validated, or a powerful reversal pattern, in the event of failure. There are three potential triangle variations that can develop as price action carves out a holding pattern, namely ascending, descending, and symmetrical triangles. We open USD CAD asset 5-minute time frame and draw trendline channel as well as zone area to know the market movements. Here you will see that candle got rejection through the trend line as well as zone area and a bullish hammer candle formed. So now we have almost 3 confirmations. First confirmation is candle got rejection through the trend line. Second confirmation is candle got rejection through the zone area. Third confirmation is we got a bullish hammer candle. So, after 3 solid confirmation, here we place a buy trade. This pattern is known as ascending triangle. An ascending triangle is a breakout pattern that forms when the price breaches the upper horizontal trend line with rising volume. It is a bullish formation. The upper trend line must be horizontal, indicating nearly identical highs, which form a resistance level. The lower trend line is rising diagonally, indicating higher lows as buyers patiently step up their bids. Eventually, the buyers lose patience and rush into the security above the resistance price, which triggers more buying as the uptrend resumes. The upper trend line, which was formerly a resistance level, now becomes support. We won this live trade too.